In today's video, I'm going to show you something that I noticed when you're trading boom and crash. So I'm going to get straight to the charts. I'm going to show you what I noticed, and then I want you to go look for yourself and see if it works, and let me know in the comments down below. So let's jump straight to the charts. Alright, so let me first explain what I saw, and then I want you to go try it yourself. Like I said in the intro, let me know if you see it the same or not. So we have days that we are going to trade. So on the chart you have day 1, day 2 and day 3. So each block is one full day of trading day. 24 hours, 24 hours, 24 hours. So what I'm looking for is, we don't look what's happening on the previous day. You can, for extra confirmation, to see where highs is taking, where lows are taking, are we respecting an order block and so forth. But what I'm looking for is if price starts with the new day, right? Let's say, for example, boom pairs, we are on boom 1000. I want price to take some sort of liquidity. So this can be, like I mentioned, that you can look on the previous day. So liquidity has been taken all on the same day. Then I want to mark out the high. I want price to take out that high. The next step I want to do, I want to mark my fib from the low to the high. These are my fib settings: 0.5, 0.618 and 0.786. I'm going to mark out this zone. And after you marked out the zone, you can delete the fib. So you know that is the zone we are looking for. So when price retrace, right, then we want to see inside of the zone, we want either an order block, we want a fair value gap, we want a breaker block to confirm the zone. So as soon as price retraces to this zone, we are going to enter our trade, and we are going to target the highest point literally of this impulse move, where we took the liquidity and where we had the market structure shift. And then we are going to target, and then the next day starts again. Starting, we took out a liquidity, mark out the high, we maybe did this, then again what we are going to do, we are going to mark out our fib, we are going to draw out our zone, we're going to delete our fib, and then we are going to look for an order block, fair value gap, breaker block. If you don't know what that is, please check some of the videos on my page where I explained a little bit more what an order block and fair value gap and everything is so on. Then we go, when we enter our zone, we're going to mark out the highest point, and that's going to be our target. And then the same thing happens here. So for example, we took previous day's lows, we took these lows, let's say we took this lows as well, mark out the high, price does this, then again we mark out our fib, we mark out our zone, we can delete the fib, then again we look for order blocks, fair value gaps and so forth, then we wait for price to retrace, and then we target the highest point of this impulse move, and then we go for our target, and we are going to put our stop loss below our zones. So that's where our stop losses is going to be. So let's jump to the charts and let's see if you agree, if this is a valid thing that I'm looking at. Is it something that I need to go into a little bit more further? Let me know down in the comments, and we can make another video doing like a full-on backtesting on this pattern that I'm seeing. So let's jump to the charts. Alright, so let's have a look on here. We are on boom 1000. Each of these lines are separated tools, so that shows you where the days begin and where the day ends. So if you want to activate it, go to settings, go to canvas and do your session breaks. If I do it off, it's off. If I put it on, it's on. So session breaks. So let's have a look. So price chopped around a little bit. We are waiting for some sort of low to be taken. And let's see what happens. So let's just zoom in a little bit. So here we can see we had a nice big push. A low was taken right over there. So that's one way we can look at it. So let's mark it out. A low has been created and we took out this low. Inside of this low, we have a nice fair value gap zone right over here. We have a nice breaker block right over here. And we have, so it's the breaker block and the fair value gap that's overlapping. The last order block is down there. So you can see price never went there. So it's the breaker block and we can see price actually reacted from this breaker block. So nice big push into the fair value gap. Let's just mark out this. So we took the low, right? We took out the high. We had a nice big impulse move. We are going to draw our fib from the low to the high. That's right over there. We are going to mark out our zones. Let's delete the fib. Is there something inside of this zone that's valid? Yes. We have a breaker block right over there. We have a fair value gap right over there. And we have a higher time frame order block overlapping right over there. And best of all, we have liquidity actually resting just before the zone. So if you enter your trade literally here, you put your stops below this zone right over here, and we are going to target the high that was formed. That's that one there, and that is a 1 till 6 8 risk to reward trade by entering there. Let's see if there's another setup. So that's one. Then again, look what happened here. We took this low, that was the liquidity for this trade, right? Let's mark out the high. We can see immediately there's a huge push on there. So we can draw our fib from this low to this high. We can actually mark out the zone, delete the fib, and what do we have? We have an order block right over there. We have a fair value gap resting right over there. So there's a bunch of confirmations that we can enter this trade. But then again, like I said, I've just noticed it. No strategy is going to be 100%. So we came down, we entered our trade right over here. Remember we said we're going to put our stop loss below the zone. So price literally came into our zone, right? We got stopped out and then what happened? Price actually moved all the way up. So that can be a losing trade. So one winning trade, one losing trade. Let's just go down to the 5 minutes so you can see a little bit nicer how it looks. There we go. You can clearly see nicely. We had actually a smaller high that's being created, right? A high that's being created here. And then if you want a tighter entry, you can literally draw your fib from this low to this high. And as you can see, price literally entered our smaller zone and price went all the way up. And then we had our one losing trade right over here. If you want more confirmation, so let's say you got stopped out here, right? You didn't go to the lower time frame. no high was actually taken right over here. Do you see that? Price comes back into this zone right over here, respecting this order block small fair value gap, come down again. Now we took actually out a nice high right over here from this low to this high, and as you can see, we entered our zone right over there, and then you caught that one up. So still one winning trade. Let's say you didn't go to the lower time frame, it will be a losing trade again. Anyway, this will be a losing trade, your first one, and then you can refine for the lower confirmation where to get a change of market structure, and then you can follow the trade rules on the lower time frame. So let's go back to the 30-minute. So it's one winning, one losing, and then if you scale down, one winning again. So let's have a look what happened on the next day. Remember, we wait for some sort of liquidity sweep. Let's quickly see here. Liquidity sweep has happened. We didn't take out the high. A new low was created right over here. Did we take the high? No. New low created. Did we take the high? Yes, we did. This high right over here. Let's see what happens. Let's draw our fib from the lowest point to the highest point right over there. We mark out our zone. You can enter your trade right over there. You can put your stops below this zone, and you can target the high that we marked out, and that's a 1.7 risk to reward trade. And as you can see, price went all the way up. Let's go to the lower time frame and see if there was a confirmation for this entry as well. So we entered right over here. Let's just delete this quickly. This is just for extra confirmation, but if your risk management is good, you don't always have to go down for a confirmation, but it is good to have extra confirmation. Okay, so let's quickly see what's happening here. We had this confirmation. So here you can go into, if you really want to utilize it, this is the most obvious high. So majority of traders is going to look at this high. If you spend a lot of time in front of the charts and you know what is a fractal high and low, you can use this one actually. Why this one? Because the candle on the left is lower and right is lower than the middle candle. So you can use this one as a high as well. If you mark out your fib, cool, we never entered our zone. So for the lower confirmation, that's a no entry anyway. Let's go back to this original high. And let's draw our fib from this low to this high. As you can see, clearly price went without us. We don't have anything there. Let's actually extend this. Let's just make the whole thing go. Let's extend it from the full move. And as you can see, we actually entered our trade, and eventually didn't happen immediately, but we entered our zone, right? And you got your trade right over there at the end of the day. But that's a few hours later. So it doesn't necessarily have to happen immediately, but on the 30-minute, you got your first trade, and that was the one without the lower time frame confirmation. And put your stops there, and you put your take profit there. 1.71 risk to reward trade. Beautiful trade. Let's go back to the 30-minute. Let's see if there was something on this day. So we are looking for lows. There's a low, didn't take out the high. There's a low, we didn't take out the high. There's a low. Did we take out a high? Yes, we did, right over there. Now, draw a fib from this low to this high. Let's mark out the zone. Let's delete our fib. Beautiful. We got a fair value gap right over there. And we have an order block resting right over here. So then again, if you entered blindly, well, not blindly, but just on the one time frame, and you entered right over there, cool, we got stopped out. Why? Because price went past our zone and we got stopped out right over there, and then price reversed and it targeted that level right over there. So this will be a losing trade. Let's go down to the 5 minute and see if we can refine this entry. Instead of just entering on the 30 minute, let's see if we can define it on the 5 minute. Let's just delete this quickly. So we entered our zone. There's a nice high right over there. Let's see what happens if we draw our fib from this low to this high. Never gotten our entry on the 5 minute as well. We never gotten it. So this will be a losing trade. I'm going to show you something at the end where some of these trades we can make it a winning trade. But for now, this will be a losing trade. I just want to mark out that one so we can see it. So this was a losing trade. Okay, let's look at this following day. Lows being created. Lows being created. Did we take out a high? Yes, we did. Right over there. Let's draw our fib from this low to this high. Beautiful. Let's mark our zone right over there. All right. So we entered our zone, got a nice reaction. So there's some profit. We came back into our zone. We have a breaker block. We have a fair value gap. We have an order block. And look what happened right over here. So we were in profit. Price came down. Took us out right over here. Before it went for 1.68 risk to reward trade. It stopped us out there. Let's quickly just do another one. I see there's another one right over here. Actually, a low was created. Fair value gap. And we have a breaker block zone right over here. Okay. We took out this high. And this is currently where we are now. And price has never come back yet to the zone. So this is one that we are waiting for. On today's price, as I'm making this video, the low has been taken right over here now. Oh, sorry, that's not a fractal low. That's not a low, sorry. So we are waiting for lows to be taken out and then have a market structure shift after the lows has been taken. But let's go down to the 5 minute and look at this entry right over here. Okay, so on the 5 minute, price came in, we entered, we had a bit of a push, price came back, wicked us out literally, and then price went for profit. So let's refine this actually. Again, we broke a high. So let's have a look here. We broke, okay, that's not a high. This will be the new high. Cool. Price came down, broke the high, got stopped out. Okay. Now there's another high right over here. There we go. So we took these lows inside of this zone. We broke this high. You can draw your fib from this low to this high on the 5 minute. Draw our zone right over here. And then you gotten in this trade right over here. Stops below this zone and you target this one, and that's a 1.65 risk to reward. So let's just zoom out quickly to the 30 minute. All right, So remember here we had a winning trade, we had a losing trade, and then we had a smaller entry on the lower time frame. Here we had a beautiful trade straight off the bat. Here we had a losing trade before it went to profit, another losing trade before it went to profit, and then we got a smaller entry right over here. So it's losing, losing, winning, 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 losing, winning. So it's about a 50% win rate. So to make this even a higher probability trade, what you need to do, you want to wait for the lower confirmation. So not only trade one time frame, always go down to the lower confirmation to see if you get an entry or not. Secondly, we can put our stops a little bit below the zone for a breathing room. That's another option you can do. It all depends on your risk management and your risk appetite, right? Where you can do this. And then that's what I would suggest to make this strategy a 60 to the 70% win rate, by going down to the lower time frames, by actually giving your stops a little bit of breathing room. I did this so that we can see the reality of how a lot of people trade. Stops are too tight. They want to take every single entry. So this is a good example to show you a 50% win rate strategy that can still make you money if your risk is done correctly. So please go on your own, go test it. Let me know in the comments down below what your thoughts are and for how long you have been testing this after you watch this video, and what's your results. Let me know down in the comments below.